Hey everyone, welcome back to the Koo Trading Desk. I'm Maya, here with Vid, and oh man, what a morning. Stocks are dipping after those US-Iran peace talks got delayed. Vid, what's going on?
Yeah, so here's the thing, Maya, when the Fed makes interest rate decisions, it's like a big announcement that can move the whole stock market. And I know it sounds weird, but stick with me, it's actually pretty simple.
Okay, I think I need simple today, haha, because I have no idea how interest rates affect stocks. So start from the beginning. What even is the Fed?
Great question, Maya. The Fed, or the Federal Reserve, is like a bank for banks. It helps control inflation and keeps the economy growing. And one way it does that is by setting interest rates, which is like the cost of borrowing money.
Right, so like when my friend gets a car loan, the interest rate is how much extra they have to pay back, besides the actual car price.
Exactly, Maya, you got it. And when the Fed changes interest rates, it's like changing the price of borrowing money for everyone. So if interest rates go up, it's like borrowing money gets more expensive.
Okay, so how does that actually work? I mean, how do interest rates move the stock market? Can you give me an example?
Okay, picture this, Maya, you're at a coffee shop and they just raised the price of coffee by $1. Some people might still buy it, but others might say, you know what, it's too expensive, I'll just make my coffee at home. It's like that with stocks. When interest rates go up, it can make borrowing money more expensive. So some investors might say, you know what, I'll just put my money in a safer place like a bond instead of stocks.
That makes sense. So it's like, if coffee gets too expensive, people look for alternatives. And if borrowing money gets too expensive, investors look for other places to put their money.
Exactly, Maya, you're spot on. And right now, the Fed is being pretty hawkish, meaning they're keeping interest rates high to control inflation. And that's making some investors a little nervous.
Wait, so what's happening right now? I mean, what's the current interest rate, and how is it affecting the stock market?
Okay, so the current interest rate is around 4.45%. And it's affecting the stock market in a few ways. For example, some investors are getting a little nervous about the high interest rates, and they're pulling their money out of the stock market, which is making stocks dip a bit.
Oh, I see. So it's like, if the coffee shop keeps raising the price of coffee, eventually people might just stop going. And that's what's happening with some investors and the stock market.
Ha, exactly, Maya, you're on a roll, and it's not just individual investors. Some big companies are also feeling the effects of high interest rates, which can make it harder for them to borrow money and grow their business.
Right, so what happens next? I mean, if interest rates stay high, what does that mean for the stock market? Can you give me some scenarios?
Okay, so if interest rates stay high, it could mean a few things. For example, if companies are having a hard time borrowing money, their stock prices might go down. On the other hand, if the economy starts to slow down, the Fed might decide to lower interest rates, which could make stocks go up. Or if inflation starts to rise again, the Fed might keep interest rates high, which could keep stocks steady.
Okay, so it's like, if the coffee shop lowers the price of coffee, more people might start going back. But if they raise it again, people might just stay away, haha. I think I'm starting to get it.
Yeah, exactly, Maya, you're getting it, and it's all about understanding how interest rates affect the economy and the stock market. And right now, it's like the Fed is trying to find that sweet spot where interest rates are high enough to control inflation, but not so high that they slow down the economy.
Okay, so what's the probability that interest rates will go down in the near future? I mean, what are the chances that the Fed will cut rates?
Well, Maya, based on the current data, it's looking like the Fed might not cut rates until 2027 or later, so the probability is pretty low, but you never know. The economy is always changing, and the Fed has to adapt.
Okay, so it's like, we're in a wait-and-see mode, and we have to keep an eye on the economy and the Fed's decisions. Got it.
Exactly, Maya. And that's why it's so important to stay informed and up to date on the latest news and data, because it can help you make better decisions when it comes to investing.
Right, so what's the bottom line, Vid? What do our listeners need to know about interest rate decisions and the stock market?
Okay, so here are the takeaways, Maya. First, interest rate decisions can move the stock market. Second, the Fed is trying to find that sweet spot with interest rates. And third, it's all about understanding how interest rates affect the economy and the stock market. And remember, this is all educational, not financial advice. Haha.
Exactly. Thanks for breaking it down for us, Vid. And for our listeners, if you want to learn more, join our Discord. And we'll catch you all in the next episode. Bye for now.